Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, the big news this week was the economic data, with the CPI report being released on Wednesday. Still showed an increase of 8.5%, but it was a little bit of a tick down from what was expected, so a lot of people saying it's rolled over. I view it more as a tick down rather than a rollover. And then Thursday we had the PPI report, the Producer Price Index. Think of that as wholesale prices, so consumers on Wednesday, wholesalers on Thursday. And the headline numbers were both affected by the fact that energy came down. I love how the government likes to throw those out with the core numbers, ex-food and energy, when it works in their favor. But when it's the opposite, they like to look at the headline number because of the big drop in energy. Now, food did stay strong in there. In fact, food's inflation is the strongest year over year since going back to 1979. So we finally moved into the decade of the 70s in some aspect of inflation. But yet, the numbers were greeted with some relief on Wall Street that perhaps the Fed doesn't have to raise rates as quickly. Inflation starting to come back down. I just one tick down. Let's not get too excited, in my opinion. And then Bitcoin did it. What did it do? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, and the futures market is closed. Hey, before we get to the charts, if you like these recordings, please hit that like button. Or better yet, hit subscribe and you'll be notified immediately when one of these videos is posted. Thanks, we really appreciate it. All right, taking a look at the SPY, you can see the market did move to the upside. As I said in the intro, the market seemed to really like both the CPI and PPI numbers. But when we add in volume, the volume's still not there. I've been stating that this rally cannot continue without volume coming in. The other side of the coin, though, is impulse moves can start on low volume, but then at some point volume has to come in and support it. It's just not there yet. Does it come in? Possibly comes in next week. If we look at the moving averages, you can see that we are just a bit overbought, closing on the high today, and we still have this little gap right here. So coming back down towards the 10-day moving average, maybe just a slight pullback, fill that gap is warranted. And we are still in a qualified 5-wave impulse pattern to the downside with the wave 4 right at that 61.8% fib extension. That's a strong level. Should be a little bit difficult to get above. But the key here is we close significantly above 420. If it holds that into next week, that volume that I've been talking about will likely kick in the form of short covering, and we could be off to the races. If we look at the DMI, this is pretty supportive of a continued move higher. That's a decent looking DMI, and what you would like to see if you want evidence of strength in a trend and the likelihood of it continuing. That's what that means. And then we go ahead and we take a look at the CMF. Money flow's pretty strong, so pretty good argument here that we may disqualify this 5-wave impulse pattern to the downside. What do you think? Are we it? We done? We're off to the races now? Let me know what you think. Post a comment underneath this video if you would on whether or not you think there's still risk to the downside or the bottom's in. We're going higher. That's it. We're done. We take a look at the VIX. You can see that we did come down to 20. We talked about this in Tuesday night's TradeFinder with where the VIX was trading, the likelihood that it's going to come down to 20. It was at 22 at the time, and it did. It came down right to that area. So that's pretty interesting. It's been just a pretty programmed move to the downside here, just stepping right on down in a really nice 45-degree angle. So now we sit right here at an area that could be support on the VIX at 20. So if the VIX bounces, then perhaps the likelihood is that this wave 4 does hold and we start to look a little bit lower. But that would take a significant bounce. We could just bounce a little bit on the VIX, come down and close that gap on the SPY. So it just seems likely that some more volatility is going to sneak back into the markets here at some point. Looking at interest rates, we also talked about this Tuesday night in the TradeFinder. Hey, if you haven't signed up for TradeFinder, sign up underneath this video or at our website, ewotrader.com. We do it every Tuesday night at 9 p.m. Eastern Time. We talk the markets, we look for trade ideas, and we have a live Q&A. It's a lot of fun. Love to have you. So in talking about the rates on Tuesday night, I was referring to my written update that we did last week. We were talking about how I've just been really confused about why rates have come down like this. In fact, if you look at rates, you can see there's a pretty good head and shoulders pattern there. There's the neckline, and when you look at a head and shoulders pattern, you measure the neck to the top of the head, and then you look for that same move lower from that neckline. Well, that would be a pretty significant move down in rates. Could it happen? I don't think that happens without it foretelling some pretty significant economic weakness, which could happen if the Federal Reserve finally does what they said they're going to do. That's what I was referring to a minute ago. That's what we talked about Tuesday night in TradeFinder, and what I put in the written report last week was the fact that the Federal Reserve had said in June they were going to start reducing their balance sheet at $47.5 billion, which was still half of the $95 that they had originally said. And they only reduced their balance sheet officially by $1 billion. So if the Federal Reserve is not going to put the double whammy on the markets that we talked about months ago, where they are withdrawing liquidity and raising rates at the same time, if they're going to leave all that liquidity in, then that could buoy the markets. The markets could move higher if that money is not going to come back out. And it seems like the market is thinking, hey, there's a decent likelihood that they're not going to withdraw liquidity the way they said they were going to. Even if they start, maybe they're not going to do it to the degree. I don't think the Federal Reserve expected to raise rates this fast, but you have to wait and see exactly what happens, and so sometimes you have to do a little digging to find out what's going on behind the scenes. But now rates make sense to me. But we're at a wave 4 that's right at that 38.2% level. Rates have ticked back up a little bit. So if the Federal Reserve keeps raising rates and they do start to withdraw liquidity and the dollar stays strong, we could see this move back to the upside. And here's the dollar kind of found itself coming right back to the top of this wave 3. We said that was a point where it may find some support, and it has. It bounced off of it back in July, and then we're back here testing it again in August. And if the dollar drops a little bit more, I don't think that's significant at all. I don't think that's necessarily a bad thing. I like a strong dollar. Y'all know that if you've been watching these videos, but not this strong, because it's hurtful, detrimental to companies with international exposure through exchange rates, etc. So I do want to see the dollar maintain its currency of last resort here and stay strong, but let's just give it a chance to where some international companies can make some profits as well. Also, in the intro, talked about Bitcoin. I said Bitcoin did it. What did it do? Closed above 24,000. And so we've talked about a couple of times this ascending triangle right here, and kind of a sneaky breakout, but I wouldn't really call that a breakout, because you can see yesterday it traded actually higher than the close today, but this is the highest that it's closed since going back until June 10th. When it dropped below 28,000. So can there be some follow through with Bitcoin? If there's follow through with Bitcoin, we will be back at that 28,000 level in no time, like in a day or two, because it was such an abrupt drop. There's absolutely no resistance here, none, between 24 and 28,000. So looking over the next couple of days, if we can put some distance between that 24,000, you'll see it spurt and jump right up there to 28,000, and then it knocks its head again at some more major resistance going back to May and June. But again, the news highest close since going all the way back to early June. Thought we'd take a look at Ethereum as well, add that into the mix, because that's a pretty strong looking move in Ethereum. You look at the DMI, you can see it is trying to curl back to the upside after a really strong move lower. Look at that DMI on the wave 3 lower. ADX going above 55, almost hitting 60, well above the negative directional indicator. There was strength to that downward move. Not as much on this bounce. So it's been a pretty nice bounce in Ethereum, no doubt about that, and it's bumping its head against 2,000, and it's right here at the 38.2% fib level, but it's still in a qualified 5-wave impulse pattern to the downside, and without the DMI showing more support for this move, you have to say, hey, we're right here at an area of resistance. This is right where we had this descending triangle here. So just as I said with Bitcoin, the next couple of days with Ethereum are going to tell us a lot as well. Moving back to the Dow, you can see the wave 4 right at the 61.8% fib level. So we have relabeled these charts. Both the SPY and the diamonds have relabeled where this was a wave 5 at the 61.8% level, just like we had with the SPY, and both of them now, as you can see, are in 5-wave impulse patterns to the downside. So we come back and see, will that 61.8% level hold? Also a little bit of a gap here, and then the same scenario when you're looking at volume. There's just been no volume in this move, and you have to remain cautious. Trade what the charts give you, trade what the market gives you, but maybe not an all-in long to the upside, not until you see some volume confirming this move, because we all know that the market takes the stairs up and the elevator down. So we could head lower in a very short period of time if the Federal Reserve does start withdrawing liquidity. So my thesis is that's what it all boils down to. Whether we move higher from here or lower has a lot to do with whether the Federal Reserve leaves the liquidity in or takes it out. And that's going to be the primary determining factor. Looking at the Qs, you can see that we did have that wave 5 at 118%, as you know. And then when we look at that, we look for a 61.8% correction because the wave 5 extended more than 100%. You don't look for it to go all the way back to the previous 4. You look for a 61.8% bounce. And that's what we've had. And in addition to that, you start looking at the amount that we've moved here. We're just kind of at that 61.8% bounce from the entire move lower. So this is an area where the rubber hits the road with the markets, and if volume doesn't kick in, it's hard to see the markets go higher from here. But volume could come in, and I've just given you the reasons. If the Federal Reserve leaves the liquidity in, that could bolster the markets moving higher. The Russell, the IWM, has moved a little bit more vertical than you would like if you wanted to hold. I like the 45-degree angle. It's not terrible. It's not straight vertical, but it's starting to get a little more vertical here. You can see that we had a pretty nice incline there, and then the last few days we've kind of gone straight up. So that makes it concerning on whether it can hold this break above 190, but you have to respect it. It broke above 190. Is that it? Is that the end of the trading range between 170 and 190? Are we moving back up to that range that we had to start 2022, which was between 190 and 210? Very possible. Still in a qualified impulse pattern to the downside as well. We look at the DMI, pretty supportive of the Russell moving back to the upside. So are these 5-wave impulse patterns going to get disqualified? That would be interesting considering the fact that they just relabeled to that. Remember, so both the SPY and the Dow, as I mentioned, just relabeling into 5-wave downward impulse patterns, and then they become disqualified immediately. That usually doesn't happen. Anything's possible, but that normally doesn't happen. Looking internationally at Australia, you can see a pretty nice bounce here as well. A little bit of a small zigzag working there right up to the 45%, almost 50% corrective level. The key here is it was able to get above 22. So put some distance there, came back, tested it a little bit. Kind of a little bit of resistance there at 23, but the next main resistance is up here at 24 on the EWA. Can the same story, can it disqualify this qualified impulse pattern to the downside? Then you look at Canada, different story here. Completion of a 5-wave pattern. This looks more like the Qs, and see if this can move back to the upside here and break above this level at 36. It did it today. Needs a second day, a follow-through or confirmation day. If it does, then you have to start looking for Canada, the EWC, to move back up here towards 39. That would be a pretty nice move. You can see that as it came down, that was pretty fast. So once again, as I mentioned with Bitcoin, there's no major resistance in the way between 36 and 39. But once again, we need a second day of follow-through or confirmation day. One day doesn't count. It needs that second day. It needs the follow-through. Looking at India, still in a 5-wave impulse pattern to the downside, but pretty impressive move here. I talked about this both at TradeFinder Tuesday night and in our insiders meeting that we do on Thursday nights for our alert subscribers only. We have an extended Q&A in that, but we've been awfully impressed with the fact that it moved that vertically, the INDA, and only had a little bit of a tick down. Not much of a retracement here, and so that's pretty impressive. Can it hold it? Well, we're at some pretty significant resistance here at 44. You break above that, and you're up to 46 at least, maybe going all the way back up to the highs from January. So as you can see, next week is going to tell us an awful lot. So stay tuned for next week's update. We're going to have an awful lot to talk about. Germany, well, at least we did get a bounce up to resistance here at 24. It's gone sideways there for 3 days. We're right at that 38.2% fib level. Can we get above this? If we can put some distance between 24, then the EWG finally has a little more room to the upside, up to 27. But it's got to get past 24 here with some confirmation before we can start looking at that. The bullish thesis here for Germany is, once again, the move down from 27 to 24 was pretty swift. So as becoming a broken record here, not a lot of resistance between here and there. So you can see that if we can start to move just a little bit higher in these markets and the volume and the short covering comes in, we could have a pretty significant rally. But we got to get there first, and the volume has to come in to support it. The easy part of the bounce is over. All right, so I thought I'd finish up with oil, talking about how energy has brought the inflationary numbers down. Energy and food kind of canceling each other out, but you can see here we have a bit of a consolidating triangle here, symmetrical triangle, which makes sense. So oil went up, 61% fib level is where we came back down. So wave 5 didn't go above 100%, supposed to come back to the previous 4. That's Elliott wave rules. That's what it did. So we're back to the previous 4. Then you wait for the next impulse move. So it completed that pattern. It completed the wave 5 target, completed the retracement, the corrective move. Then what happens? A lot of times you go into one of the corrective patterns, flat zigzags or triangles. In this case, oil's gone into a triangle. So pretty nice looking little symmetrical triangle there right at 75. Breaks above 80, we're probably off to the races to the upside. If it breaks below 70, we're definitely moving down significantly lower from here. So we could have some pretty extended moves either direction from this triangle. And as you know, triangles can break either way. But what's interesting is if it breaks out this triangle, or when it breaks out this triangle, it doesn't have to go very far before it can break major resistance or major support, which gives you a big extended move. So I thought I would show you that. Strangle looking pretty interesting on oil at this point in time. Hope you have a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.